Hello everybody. Yeah, I want to show you today quickly how to make money on the stock market, and it's pretty easy. So what I want to show you, look, for example, like my way is long-term investing. Look, for example, Exxon Mobil stock. You put in here Exxon Mobil. Let's go here and look at it. I go to max on the chart here in that area. Okay, now you see the stock is at 89. The peak was at 100, and even so the oil price went down brutally, it isn't that much down. And so now you look, it is this chart goes back to January 70, so 46 years, almost half a century the stock goes back. So if you take a look at it, it was there worth like $2 or $1, and that $1 grew to $89. And if you kept it over that period, you would have made 40, almost 5,000%. What you can see here, percentage change. So just by holding it within, you have dividends and stock appreciation. Both lead to a stock gain of 4,921%. And the secret is just to hold on to them through the crisis. You had here crisis 2009. No, where's the 2009? Sorry, this one, 2009 crisis. This was when the real estate bubble burst and the economy fall into a disaster. Afterwards, you had a boom. The oil went up, and then you have here now again. But you just hold on to all these crises, all these recessions. You hold on to it, and maybe you even keep on buying in those crises. But the trick is to just hold on to great stocks. And also here you see each quarter they pay a dividend, 73 cents. The quarter before 73 cents, and you go back, as you see the dividend increases almost always. So this is also called um, they have a special name on the stock market for these kinds of stocks. They call them aristocrats because they keep, at least for 25 years, increasing the dividends. The management increased it for at least 25 years in a row. So it's just an amazing stock. It's an amazing history, ExxonMobil. So you can also look at others, like let's look at something else like Amazon. If you are more like a growth investor, you look at kind of Amazon. They don't pay a dividend. You can see here no dividend, but the stock is just moving upwards. Look at that, the long-term chart. Just they also had many problems, but it's growing. It's on an all-time high. It's $700 the stock. There are no dividends, but look here, it went up since going public. It's a crazy amount. I don't know. You can't even read the number there. Is it like 468,000 or 46,000%? Let me see. I think it's 46,000% the stock went up. So if you look back, the stock costed in May 1970 $1.30 or $1.50, and here they had 3 stock splits. Here split, here split, here stock split. But over the long run, it was a tough time here when the dot-com bubble burst. But people with buy and hold, they just made it. It's a terrible long time just to wait and wait. And here you would have felt like, what the hell, I'm losing everything. But then it recovered, it's sideways, and here it's exploding now. Always in between you have like people get critical and think, is the model still working? And then the stock drops a lot, but it picks up again. It's just a machine. It shows you great companies. The best way to deal with them is just buy and hold. Just keep them for the long run. That's what you should do. And look at another, if you like growth stocks, you look at all these internet stocks. For example, Netflix too. I own Netflix, I own ExxonMobil. I just buy and hold. I never sell. That's my strategy. I never sell. It's a brutal buy and hold, but I don't sell. I would even go down and under with a stock. If it goes bankrupt, I go bankrupt. because I know this buying in, going out, buy and sell, trading doesn't pay off. Look at this one. What is the benefit to trade this stock? Netflix. There's no benefit. It's just exploding. Why would I ever think like I go from here to here? Okay, I take 10%. I make 10%. Okay, and then I'm out. What the hell? Look what I missed on it. So it doesn't make sense. Here was one stock split in 2014, and here was another stock split, but it doesn't bother because the stock price is adjusted for it. So you look back, the IPO was around May 2002. The stock came for a price of around $1, and it's now almost $100. Buy and hold. Quality stocks. And also a good sign is like here you have management involved. The founder owns a big chunk of stocks, and also the founder is a CEO. The same with Amazon. It's kind of a family business. Okay, what else you want to look at? You can also look at very conservative ones like Berkshire Hathaway. Let's look at the original stock. That's the A share. It's a crazy price. There was never a stock split. It went, I don't know, from $60 or so when Warren Buffett bought it to today, 200,000. $60 to 200,000 or so. It's crazy. And right now the stock costs $215,000. And when you go back, it doesn't go back all the way. Warren Buffett bought it 50 years ago into the business, or 51 years ago. And that stock, unfortunately, it doesn't go back all that far. It goes back to March 1980. And since then, the stock exploded 82,000%. It was back then in 1980, $290, and now it's $215,000. Okay, so what else should I show you? Let me see. Yeah, if you like more conservative stocks, like this dividend aristocrats, there's for example Johnson & Johnson. It pays a dividend yield of 2.8%. Look at that. Buy and hold pays off. Look at that. Every quarter dividend. It's a machine. It's really a machine. It went up. The stock went up 10,000% since here the 70s. Well, look at Procter & Gamble. P&G, Procter & Gamble. The stock pays a dividend yield of 3.3%. If you would have been a long-term investor, look, why do you want to trade that? It's slowly going up. It's a machine. It's a steady eddy. That's how they call it. Always dividend. Look at here, 44 cents, 48, 52, 56. It's also an aristocrat. Here was a split. Here was a split. Here was a stock split. You see it here. And it went up 4,700% since the 70s. Just buy and hold. What do you want to do here trading? Does it pay off? No. The compounding pays off. The machine, let the machine run. Let it just sit there. You can do the same with the Dow Jones. You buy the Dow Jones like an index fund. Vanguard is very great, and you hold on to the index fund, or you keep on adding during like every month or every quarter. You keep adding. It's a machine. The index fund, by the way, looks kind of the same like those blue chip companies. Yeah, and that's the way to go. Long-term investing, don't worry. The stock performance is, the total performance is based on two factors, dividends and stock pricing increase. So you always have to think about both. But if you like growth stocks, you can make also a lot of money. Look at Facebook. It's a pretty new company, but it's already looking really good. Or look at Google or Alphabet. Look here, Facebook. Facebook was a record high. It came here. It came public. I think it was here. It had a terrible start. 2012. It started with around $32 and it went up to 117. Just buy and hold. That's the secret. Here, you would have thought, here, what the hell is going on? I'm losing money. But just wait through. You can have a terrible stock, and you may wait, and you can lose a lot, or everything like General Motors or Kodak or so. It can happen, but overall, the good, oh, that was a mistake. The good companies will lead you move the whole portfolio up. So you have to have a nice portfolio. So you can't just buy one stock. You need a bunch of them to limit the risk of a failure. Okay, that's all for today. Bye.